Hey there, my name's Curtis Lucas and you're watching Empire Building. In this video I'm going to be taking a look at an article that was brought to my attention from someone in the comments that claims that Marathon Digital Holdings spends $2 for every dollar of Bitcoin that it mines. We're going to have a look at the sources or the data that they rely on to make such a claim and evaluate if this makes any sense at all. I think this is important because this kind of information has been floating around a lot out there. So let's actually dive into this and actually understand the metrics behind all of this. Let's actually use our faculties and deduce using actual mathematics to determine what actually might be happening here. And as always, I'm only here to provide you with some perspective. You have to do your own research, come to your own conclusions, and make your own investment decisions. So this article is brought to us by Investor Place by Alex Siros on April 19th, 2021. So just a few weeks ago, maybe a couple of weeks ago. Marathon Digital Holdings has been one of the biggest stock stories as of late. Shares were well under $1 a year ago and now trade near $35. At this point, the Bitcoin miners' meteoric rise should cause trepidation on the part of investors. In fact, its mining business does seem overpriced. It's the company's business moves outside of mining operations that have bolstered Mara's stock. However, that only complicates the investment thesis behind the security. Ultimately, there are a few reasons I think the recent downturn in price will continue. Mining operations. Since Marathon Digital Holdings is a Bitcoin mining company, it makes sense to understand how the company fares as a miner. Mara's stock didn't take off until December 2020, but investors need to take a look back at that time to understand what's happening with the company. This makes sense. It's a fair point to make. You do need to look back on a company and understand what developments have actually occurred in that time to actually warrant such a rise in the company's share price. In the fourth quarter of 2020, Marathon Digital Holdings mined 157 Bitcoins. Marathon also bills itself as a digital asset technology company. In the same period, it reported $2.6 million in revenue and a net loss of $5.2 million. The investors that are so interested in Bitcoin mining and Marathon Digital Holdings in particular seem to continue to remain disinterested in metrics. So this is interesting. They seem to think that Bitcoin mining stock investors are only interested in the past performance and apparently can't do math to determine what this company's future performance will look like, considering the miners that have already been ordered, and maybe speculate a little bit on what Bitcoin's price might potentially do over the next 12 months. We're not going to consider any of that here. Throughout the entire year of 2020, the company recorded over $4 million in mining revenues. Those operations led to a net loss of nearly $10.5 million. So it looks like the company is continuing more of what it did throughout 2020. That is, continue to roughly incur a net loss of $2 for each $1 of Bitcoin revenue it mines. Obviously, this reeks of one-sidedness. To simply evaluate Mara based on the amount of Bitcoin it mined during 2020 and how much money it spent during that same period is absolutely insane. So it leads me to wonder, either this person doesn't understand math or hasn't read any of the announcements of the Bitcoin miners that it has ordered that are being shipped out and currently being built out as we speak, and also the amount of money that had to have been spent in order to make that happen. Of course, they reported losses during 2020, and they weren't mining that much. They were a very small miner throughout 2020. It isn't until 2021 that they're finally starting to catch up with some of the other larger miners that were present during the entire year of 2020, like say Hut 8 or Bitfarms or Argo Blockchain, which I might point out is still hilariously undervalued compared to, say, the riots and the Maras. So the case that this reporter wants to make is that we should simply be evaluating Marathon Digital and any other Bitcoin miner based on what it's mined over the last year, or over the entire year of 2020, looking backwards. We're not going to look forwards at anything that's happening and evaluate it based on that. For Marathon's year-end report for 2020, it did report a total revenue of $4.3 million. Again, though, we have to acknowledge the fact that Bitcoin's price at the end of 2020 was considerably lower than it is now. On the last day of 2020, Bitcoin's price was sitting at $29,000, whereas currently we're nearly double that price. So again, even if Mara hadn't even grown in their hash rate capacity, they'd still be twice as profitable as they were then. But we're not going to mention that. So let's see what is changing. Even by the date of this article, Marathon Digital had already announced the mining performance results for the company for the entire first quarter of 2021, but this article, this author chose not to reference that data. For the entire first quarter of 2021, Marathon Digital mined 196 Bitcoin, which, based on the price at the close of that quarter, would have, or at the time of this reporting perhaps, would have valued that at $11,524,800, which just so happens to be more revenue than this author pointed out that the company had made throughout the entire course of 2020. By a lot, having only been $4 million for the entire year of 2020. That's even more than their entire net loss that was reported during the year of 2020. But you can guarantee that Mara's operating expenses outside of its mining operations is considerably less now than it was in 2020. They're not paying the same amount that they were to lawyers and firms and consulting fees and other professional services that they were required in order to raise the funds they needed and place the orders that were required to acquire all of these miners that are now being delivered and installed. They're not even spending any money on the installation itself, because that was covered off by issuing shares to the company, the contractor actually performing that work and maintaining all of those miners. There is no cash drain on those operations. When we go back and look at the expense report for the year 2020, we can actually see the cost of revenues for the entire year was about $7 million. A lot of everything else came from impairment of mining equipment, compensation-related taxes, consulting fees, professional fees, general and administrative. A lot of those will actually come down, in my opinion, or stay the same. They're not going to rise with the price of Bitcoin or with the amount of mining that they're actually performing. Many of those costs are either fixed or one-time expenses. So it does not take a genius to realize that with a little bit of math, you can deduce exactly what's going to happen next. That's one of the things I love about these companies, is that analyzing their performance and predicting that performance is incredibly easy. You just have to understand how to do the math. And it gets even better, because we just had a new update just a couple of days ago where Marathon explained exactly where they stand today, where they finally passed the 1 exahash threshold, putting their current operations at about 1.29 exahash per second. In the month of April, Marathon Digital Holdings mined a total of 162.1 new Bitcoin. That's more than the entire fourth quarter of 2022, where they had only generated 157 Bitcoin over the course of the last 3 months. They're now doing that in 1 month and continuing to grow. Not to mention, Bitcoin's price has doubled since the end of 2020. I don't know why this is so hard for the news media to understand. And the exponential growth path that Marathon is on is only accelerating. The next thing they point out is that Marathon Digital Holdings had 5,134.2 Bitcoins as of April 5th. But it's important to note that the vast majority were purchased, not mined. The company purchased 4,813 of those Bitcoins with proceeds from an at-the-market offering with $150 million. Those Bitcoins were purchased at an average price above $31,000. So currently the deal is a good one for the company. Currently Bitcoin's price is around 55 million. Well, that would be nice, except I'm sure they meant to say 55,000. Proofreading can go a long way sometimes. But I can't help but wonder if Mars stock investors are conflating the company's Bitcoin holdings with its actual mining results. No, I think that Marathon Digital Holdings investors are able to distinguish the difference from Bitcoin mined from Bitcoin purchased. The fact of the matter is that Marathon Digital Holders investors are happy that Marathon had the foresight to protect their cash on their balance sheet from the effects of inflation. There's nothing to indicate that the company is getting better at making money from mining Bitcoin. Isn't that what stock investors are buying into? The strength of the company? Nevertheless, the company is ramping up the scale of those less than stellar operations. It's frustrating to read things like this, especially when it's so obviously conflated. It's so obviously one-sided. And obviously, some investors read this and believe it. This isn't complicated. It doesn't need to be. To just assume that all of Mara's expenses are going to inflate along with the increased mining capacity is just ridiculous. And reporters such as this will have to keep an eye maybe on these people or just ignore them, because the reality is time will tell. And frankly, these people clearly have no concern over their own credibility. They'll say whatever they want to say. Now, we will note that at the bottom of this, it will say that Alex Siros did not have either directly or indirectly any positions in the securities mentioned in this article. But that doesn't mean he maybe wasn't paid to write such a hit piece. Of course, this we'll never know, and I'm not accusing him of anything. To take a page out of Stephen Mark Ryan's book, I may be hallucinating. But I can infer that maybe there's another motive here. But this is where I come back to the reality that we need to take a longer term outlook on these stocks. The fact of the matter is, while these last couple months have been painful, we're still well within a rapid growth trajectory. The fact that the mining stocks have been unfairly targeted over the last couple months, it only tests our resolve and our ability to see through all the FUD and noise. But the fact is, by the time the first quarter results are actually published, I don't think it's going to have a huge effect on the stock price, because while I do think we will show a profit, it will probably be a relatively small one. Certainly nothing that is going to get a lot of people excited. We already know how much Bitcoin they mine, and really that's all we care about. What we're more interested in is seeing what's going to happen next. Looking back at previous reports is going to be the mantra of all of these so-called reporters that are going to constantly try to drag the price back down again by looking to the past instead of looking to the future. But one thing for certain that the past does tell us is that these companies are growing. And in the case of Mara, growing at an incredibly fast rate. In the previous operations update, they outlined that over the balance of the year, the delivery rate of the miners is going to begin accelerating by the end of July into August, where they'll start receiving 7,000, then 8,000, then 10,000, then 14,000, then 25,000 miners in 1 month. 25,000 miners is more miners than the company currently has in service. It's twice as many, in fact, in 1 month. That's the kind of growth we have to look forward to. And who in their right mind wouldn't account for that when investing? The only argument they can make is that perhaps Bitcoin's price isn't going to continue to rise. Well, try telling that to a Bitcoin bull. If you don't think Bitcoin's price has more room to go, you're not investing in any of these stocks. But it does mean we need to be patient. The sun has not set on this story yet. The overall price trajectory of Bitcoin still remains strong. The fact of the matter is, we are very close to the tops we had just formed not so long ago. We have only approximately 12% left to rise to reach our former all-time highs we formed just a few short weeks ago. And if anyone has been paying attention, this is not the price activity you see at the top of a bull market. A 2-month-long price consolidation followed by a massive drop in Bitcoin's price has never happened. There's too many people waiting to buy the dip. And even if Bitcoin's price doesn't continue to rise, the miners will continue to expand their hash rate, further increasing their profitability month over month. But the odds of this simply forming the upper limit for an extended period of time, in my opinion, very low. Today's movement was actually quite promising, and I really do think that we've got a lot of momentum here to follow. Obviously, not financial advice, but if you're holding for the long term, there's no place I'd rather be. So remember to keep your wits about you and don't let these fearmongers steer you away from these opportunities. Well, that's all for this one. Now let's get back to empire building.